The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this Monday, December the 6th. My pleasure to be here, all-time highs. What can I say? Sounds like a broken record. That record will change at some point very soon. But in the meantime, we're looking at one of the things that we've discussed here so many times, and that is if we make a new high, will it be in the Chapman wave or leg D? Remember, we were talking about potential last week of the quickest we could get to a leg D would be Monday, and if there was no new high on Friday, that would make a peak C, and that will allow Monday to spike to the upside. It is. It's just, as someone just emailed me and said, how does this Chapman wave work? Why? How does it always get to at least that D, especially when you're going to new highs? I have ideas. I haven't articulated them in any specific scientific way, but it has to do with waves. But I don't know. There it is. Leg D in the E-mini. Leg F/C in the weekly chart. 120-minute chart as an alternate count as well. And the reason why I am sticking with this alternate count in the weekly, I'm more inclined to say it's looking kind of like a leg C more than an F, but especially since we went to a new high this week as well. But the 120-minute chart, look at this, the arch formations in the MACD's 120-minute turnarounds here is now just gone negative in the 0% line. It's at minus 10. The stochastic is still very strong at 90%. The on-balance volume blue isn't, but the stochastic is. I'll be discussing all these techniques, why we've been long, why we've been trying to stay long, why we only have long positions. Just starting, we tried again to get short the semis and just missed again. It's a pity because that's one of the things we've been focusing on for months and months. However, within the context of what we're doing, let me just quickly say this in case I don't have time later. This coming Friday, there's still time to go there. There is the, right here, it's coming up. This is, oh, come on. Okay, there it is. So this is the Chapman Wave Master Trader Series. We call it a Master Trader Series only because it's really, it's one-to-one. No matter how many people it is, it's still a one-to-one type thing. It is online. It isn't in person, but it's almost like you're there. And it's going to be this coming Friday, all day, starting at 9, going to 4:30. I can't even tell you how everything is fitting so nicely into the parameters that we always look at in terms of the Chapman wave. It's going to be a class that goes through everything. You don't have to be a master of anything. You just need to be able to identify peaks and troughs. You need to look at patterns. Patterns repeat over and over. And most importantly, I'm going to take you right from, even if you are used to the Chapman wave methodology, this is going to go through things in extremely articulate detail. I find it's very, I love to do these things because when you teach, you learn. That's just the way it is. And one of the things we discussed is that within the Chapman wave methodology, if you do get to a leg D, if the stochastic is strong, in this case the S&P E-mini has gone to a peak D in the on-balance volume, the stochastic's at 89% and still very strong, and the MACD's fast-moving average, the 9-period differential, the green line, is way above the red line. For that green line to cross negative underneath the red line, you would have to see a smash to the downside, I would say below, way below the 9-period moving average, probably below the low of Friday, which is 2605 in the E-mini. So that's very positive, in the MACD and stochastic in the weekly chart are very positive. Let me just move this away now, and I'll give you parameters real quickly. I'd say to subscribers early in the morning, because this is what I do. I wonder if I can just show it here, because with the webinar, you get a month subscription to my daily newsletter, and that articulates these waves very clearly. I do that every single day with stocks that we have, or even ones that we don't have, as well as the Dow in great detail. Most importantly, let me see if I can find this here. I'm looking for, I think I got rid of it. So every day I show the email, I show this chart right here, and I give parameters that we're looking for. Today I said the 26 right here, 2663 to 2367s, I believe, would be very strong resistance. And the high today so far is 2365.25. And I said if there is a break below 2649 to 47, that's support at any point in the next day or two. That's going to be a negative. But if it can hold steady here, that's good. Now, let me just get out of this because I have to show you some other things, because we're going to, within the context of what we're going to study, look at the 9-period exponential moving average. You'll have a whole 15 or 20-minute section just on the 9-period moving average and how the moving averages themselves can help you in your trading. Look, the weekly chart is walking the 9-period moving average. If you look at the Dow, we, for some subscribers, still have a long position in the Dow from the 22,290s right there. Our short position got taken out. Very unfortunate yesterday. Who knew they'd have such a big smash to the downside? So we got taken out for just over a 6-point profit in the shorter term. Hey, that's pretty good in the diamonds, trading at in the 240s. So it did scream up to the Dow went to an all-time high today of 24,534. So as I'm looking at this, I'm suggesting to you that if we have a rotational correction, now I can go through the different indices. If we have a rotational correction, the Dow can hold for a couple of weeks going into the first week of January, which could be a real chance for the market to pull back in unison. But in the meantime, if you get other areas that are showing some strength, like the XLF, I had a bunch of questions about the XLF. Yeah, screens up to a leg D today in the daily, F/B in the weekly, and the monthly is still in leg E. So this is saying to me that you've got to be very selective here. And I think that that's what we're trying to do, being very selective. And so the financials are doing well. JP Morgan was one that was asked about. JPM trading up 2.37, also in a leg D. All these Ds, and it says that there should be some kind of a consolidation coming up in even the financials in the shorter term. Just a consolidation. That's all I'm looking at short term. So that was the question. Next question was, let's go to the numbers. INDU. The Dow trading in leg D, gaps up. So the big question, of course, now for everyone is, what do gaps mean? Because we've had tons of gaps to the upside going to all-time highs. That's very unusual. The sort of thing you saw back in the year 2000, January to March, going to the top. At the same time, a gap is merely another little icon to look at. Look like the 9-period moving average of 23,980. Well, there's a gap below that. The gap is from the 29th, where it spiked up with a low of 23,872. That would be your next. So all they become are little beacons. You're driving along the highway, and the sign says exit 23 gas and restaurants. Do you want to do it, or don't you want to do it? You have a choice. And in this particular instance, when you're getting closer to your stop, for at least a decision to make whether you go on to take the rest, peak D is where you start to think about. I'll be right back. Basil Chapman, I can think of myself.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Basil Chapman will be hosting a full-day Master Trader class Friday, December 8th from 9 a.m. until 4:30 p.m. This live 7.5-hour online class will teach you the complete concepts of Basil's Chapman Wave trading methodology, along with a variety of indicators and charting patterns that Basil uses on a daily basis, including the concept of higher peaks and lower troughs, the importance of the peak D, buy and sell modes, sustaining rallies and declines, MACD, stochastic, moving averages, on-balance volume, and much more. Everyone that attends will also receive Basil's CD book introducing the Chapman Wave methodology, a $249 value, along with 1 month of his daily trading newsletter, The Opening Call, a $128 value. Basil will be using live charts where and when possible in the webinar to show the concepts of his trading methodology, which works on all time frames. For all the details and to reserve your spot today, visit the front page of TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I was asking the den about XLE. Is that what the question was? Are we going to rotation to the energy stocks? Well, this is the Select Energy Spider ETF, trading at 70.53, made new heights in leg C. It's just hit the 200-period exponential moving average in the weekly chart. That's a really good sign. But in leg D, it says right here, yes, we could go a little higher, but I would like to see just a little consolidation so that I can get a sense of, does it break above and turn the 70.52 area into a support level, or is it going to pull back and turn that into a barrier just short term? But Select Energy, I would say yes, you could look at those. There's some that are holding very nicely, some that are doing very nicely. Maybe tomorrow I can get into it a little bit more. I don't want to just do it off the cuff. Most importantly, a couple of questions like the S&P, SPX, where are we going? Well, this is a leg D, and it's a doji candle right here. I treat doji in my webinar. I'm going to talk about only the doji candles. Those are the kind of plus sign candle, looks like a little thin wick. It opens at the and closes at about the same price, and then the wick is either like a plus sign, kind of an equal, a little bit up, a little bit down, thin wick shadow, or it's long. And I have the definitions. Long-legged doji has implications. Short-legged one has implications. Spending quite a bit of time on that as well in this all-day webinar on Friday. And believe me, if you use today to get your Tiger, if you can still get the Tiger dollars, it's a fantastic deal. You get my CD introducing the Chapman Wave methodology. This is that book right here, my CD book. Talk about the phantom peaks. I've got 27 chapters. I've got a huge glossary of techniques. I go through it absolutely step by step by step. Every sell signal, the sell signal goes to sell mode, the buy signal goes to a buy mode, the restarts, all sorts of things like that. Some of it is really simple, and some of it takes a little bit more thinking. But if you read it like a book and just let the things that sift and go right into your mind and stay there, and then work on the things that you really understand, it can really help you. I get from emails from people all the time saying, gee, I really got help from that particular technique. One of them we've been using here, I have to show this because it's part of the techniques. We went long UPS, and this came after my webinar of 2 weeks ago tonight. I did this, and I said we'll be looking at positions to get in that could be more intermediate term rather than just quick ones. So we went into UPS, United Parcel Service, right here, that little doji candle on the 8th of November. What am I talking about? That was 17th of November. And then what happened was, no, sorry, I got to give you the right date. I believe it's 28th of November. 28th of November. And we've had 1, 2, 3, 4 sharp candles to the upside. One of the things we're looking at is how does the stochastic, the torque, give that acceleration to the upside with the price as the MACD starts to cross sharply positive and expands that. I call that the Chapman wave squash. We're going to be talking about that. How does that impact? And what I said is a squash can take you very quickly to a leg C. Then the stochastic starts to slow down. The MACD takes the momentum over, the overdrive, keeps the price momentum going. The other thing is there's a Chapman wave left side, right side price time match, as well as a Chapman wave. This is different to the cup and ladle, which books have been written about. It's one of my least favorite techniques. You've got to get it exactly right. When you do get it right, it's fabulous, but you better get it exactly right. Otherwise, price just comes right back into the handle. The cup and ladle, Chapman wave cup and ladle, is different. It just spirals to the upside. So this answers the question here. I had a question about transportation, the IYT. So this is part of the transportation index, United Parcels, shipping, etc. So look what happens. It spirals to the upside. In the Chapman wave squash, you should get at least a D. At least a D. And then you got to be careful because it can come back to the breakout point. In this case, 121.75. But look what's happened here in the weekly. That is outstanding action. And that's the reason why I'm not sure I want to go very heavy short, because the transportation average is now acting very well. And that's very important. Is this a G, a final push into the Chapman wave inside track? I'm going to be teaching about that as well. Look, right into the area of strongest resistance, even though it's an all-time high. But it's leg D in the monthly chart. So these are things that are very important. This is what we're discussing. Really, if you've never done anything other than some charting, looking at the price movement, etc., this is exactly where you can come in. You don't the lettering. I'll educate you as you go along. It's really about chart formations, how they work, what you do, and then it's very easy to count 4 peaks to a D. Look at that D, 121.75 down to 111s. That's a big move, 10 points. And look what happened. Now we're in leg C to the upside. So these are things that I want to discuss in tremendous detail. It is for the people who are joining us for that Friday event. You'll get my CD introducing the Chapman wave methodology. You'll get my subscription to my monthly service, the opening call. You can email me anytime. I'll be sending you charts back and forth to whatever questions you have. I love doing these things, and it's an all-day event. Really looking forward to it. So let's go on. So UPS, that's part of the transportation index. Look, IYT spiking to a leg D. Now, this is going to be very interesting. A D in the weekly chart, very strong. Technicals very strong, but not nearly as strong as the daily. The daily is 92% and the MACD is still climbing. So is it going to suddenly stall, maybe make an E even or an F, and then suddenly stall and go sideways? Look at the monthly chart, leg E, very strong leg E. Look at that, continuing into December. MACD and stochastic there are very good. It's the weekly chart that's playing catch up. Well, often when the weekly chart finally catches up, that's when you've got to be a bit careful. So yes, IYT is looking fabulous. Next question was about the XLF. Did I just not do that? XLF capped up to a leg D. MACD and stochastic are good. Weekly chart's got that same thing, higher highs, higher lows, looking very good. Leg E in the monthly. I really think that January is where we've got to start being real careful from what I'm looking at. But in the meantime, this says that the financials are doing well. Well, wait a minute. The TLT went to a leg C and then gapped down today. What's going on? Well, bonds, I'll talk about bonds in a short while. We'll get to that. But in the meantime, I think what I'd like to do is to just say the QQQ series, very negative. Peak D, Chapman wave peak Ds, those are very important. I wonder if I've got a chart that shows that right here. Can I find it in time? Let me see. I need to do this just so you know. Yeah, there it is. So this is something that we always look at. Chapman wave, you identify the lowest, most obvious low bar. It can not be obvious sometimes, but here it is. And then you count each successively higher peak, uppercase on the way up, fourth highest peak, A, B, C, D, is where other things can happen. That's where you can get an instant restart to another buy mode on the upside, where you can get a sharp reversal. This is where you've got to take your foot off the gas, let it run, but you get your foot hovering over the brake pedal. And that's the way it is. And that's what we're going to be discussing in great detail. Now, let me just get back to D, semiconductors. It's under the 1, 2, 3, 4th. This is the fourth session so far. It's under the 9-period exponential moving average. Weekly chart is an E/C. It's beginning to look like an E, but I'm going to just give it a little time. We missed shorting it. The semiconductor index, which is really one of the reasons why the QQQ series is down. Let's go to the SMHs just as we're going to the break. And the break says, wow, is that ugly? Yes, that is ugly. That's the semiconductor index. The leader on the way up, peak D, Chapman wave 105.83, 2 bar times 2, Chapman wave 2 bar reversal. It'll lay B to the downside. The weekly looks like it is a peak D. This is going to be a problem. I'll be right back. Basil Chapman Dow is up.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
In the IWM, the iShares Russell 2000. Again, this weekend, I spent some time trying to figure it out. I have to consider this is leg B, and that the small caps are benefiting right now a little bit more than some of the other indices. The Dow is something very different. It's the reason why we've traded the Dow. We want to be also have a longer-term core position. Is the Dow? I think is just perfect for this market. There's a whole environment. I've been talking about that for over a year. since they mixed everything up and they've got 5 financials, never heard of. They'll pay for that in the end. But right now, I think that's working well. Even if the actual, like American Express, let's see where that is. American Express, XP is down, I think. No, it's up. Yeah, even if the basically, let's call them credit card companies. Some of them are really just, they do the transfer of money more than anything else. Holding very well at this particular point. Getting a little bit overbought, no question about it, but just had a decent correction, so they can hold a little bit longer. American Express, I don't know if I should reclassify this. I'm calling it F in the weekly. D daily, F in the weekly, leg C only in a new all-time high in the monthly. Not even the credit cards are helping. So that's the way it's going. The next question I had was, could I look at Costco? Sure, Costco, right here. Costco is, oh, look at that, all-time high. Leg D in the weekly continues. I don't know. That has to be an instant restart. So that's A, B, let's call this C in the daily. And that's an Chapman Wave instant restart. I'll be discussing that as well in my webinar coming up on Friday. These are techniques that can really help you in terms of just whatever techniques you have, you add them. You don't want to become, what would I call it, a Chapman Waveite. You've got to have, I love to teach so that it becomes part of your repertoire, not mine. I want to learn from you in the end. And that's really important. It's got to become part of what you like, part of what you look at, part of what is your vernacular. So this D is an instant restart. That becomes E/A, that becomes B, and that becomes C. So yeah, Costco is acting very, very well. Within the context of, and then he mentions 5. Sarah. Yeah, Sarah, I love 5. In fact, I would have liked to have bought 5, but at this point, I said it, 5 is 5 below. Inc. I spoke about this with subscribers ages ago, and then it just kind of went off my radar for some reason. But this is exactly what I like. 5 below, trendy close for $5 or less. That's what they say. I've never been in. But this recycle, this is really ABC. I'm going to call this a C in the daily. So I'll wait, but I think this is one of those companies that's a survivor. I think it's a survivor. Now look at this. Chapman Wave, cup and ladle breakout from a C, overlapping wave as well. It goes to a D. D eventually, in an overlapping wave, comes back and retests the breakout point. I don't know when, but the 55.28, 7 points lower. At some point, is going to be tested. That's the character of this particular pattern. Okay, now I think I've covered a bunch of stuff. Oh, IRBT. Let's see, what's the time? Will I have a chance? Oh, iRobot. Yeah, this is a good question. So Tim wanted to know, oh no, is that Greg? Oh, I missed that. Sorry, that's Greg. So Greg asks, good morning, Basil. Could you look at IRBT? I owned it in October and sold my position out at 76.67 for a small profit. I've been looking to get back in. It is testing my an arch formation with less volume. What do you think? Thanks, Greg. Actually, it is an arch formation, and it's in, look. So the low of the 26th of October at 63, round number, goes to 62.96 on the 30th. And then it starts, look, a little bit of a buy mode, goes buy signal to buy mode. That is an A, peak B, peak C, and then it goes to a D. Oh, man, these Ds, I have to tell you something. D, and now it's making that arch formation. Arch formation right there, right there. So I'm going to say hold off. And there's a reason for that. Because bots, which is something that subscribers now have discussed for ages and ages, since the summer, late summer, went to a peak E, top, almost a doji candle on the 24th of November at 24.97. This is a Globex Robotics and AI ETF. I believe it's going to make a peak A in the monthly. It is a G in the weekly chart, and I think it's due for a rest. We'll be looking at this very seriously as a buy for 2018, but I really think it needs a rest and will come back. So this probably fits in that category. It also has this cup formation, sorry, the arch formation. Hold off, remind me in 2 days to look at it again. It might have a bounce. Maybe independently it could rally, but I think the larger trend is down. So just have patience, Greg. I think you're going to get a much better entry point. Next question was Tim. There it is. Tim says, would this be a good entry for QID for a short-term trade? Thanks, Timson. So, let me do this again. Look, the QQQ. Yes, I'm going to say, I know that you're able to put on positions and not just stick with a position. I'm going to say, start your position. I would have loved to have done it at the opening today. I probably should have done that with the SMHs. There is going to be a bounce at some point, but it might be lower lows and lower highs. I'm going to say not a QID. That's 3 times short. I'm going to make the suggestion, go for the 2 times short or even the 1 time short Qs. Just get a feel for the situation. That's number 1. Number 2 is if you want to go for the QID, I would have to say now you have, this morning I would have said you could go for a half position short and make your stop on the QQQs, the 156.69 high. If it goes to 156.70, you're done, you're out. I'm just going to say, yes, you could start your position now, not quite as big as it was. And you asked me about the QID. I'm going to answer on the QID. What you really need to see is the Qs themselves trading 153.66, break under 152 on a closing basis in the weekly. And then I'll say, great. Now you've got a sell mode in the daily. You're about to get a sell signal because I'd like 2 closes under the 9 EMA before I go to a sell signal on the weekly pattern in the Qs. So it's a good start. Don't get too carried away. It's your entry point. Okay. Hope that helped you. I think I finished with those questions. Now, questions in the den. Basil, do you see any signs this motor-hated mega bull market is getting a little love on the margin? Maybe just a kiss on the cheek or heavy petting? Thanks. I'm not going to go that route. What I am going to say is there are a couple of things that are going on right now. If there is a rotation, as long as there's a rotation, people are going to love this market. If you start to see the IBB, where's the IBB right now? IBB is trading down 36 cents at 105.34. I said to subscribers, I would like to buy leg C, but only on condition it doesn't break above 106.33 first. So it's done that. So now I'm stepping aside because at leg C, I need a lot more evidence that it's going to go much higher. So that's one area. SMHs are done. It used to be you can consider them a good go-to area. What are we looking at? So let's just go back. We want to look at the IWM and say, look, the IWM, small caps, and the IW, is it B? I haven't looked at it for a long, IWM, IWC? Yeah, the iShares, the micro caps. I want to talk about that when we get back. There are sectors that are going to hold well. We'll look to see if the micro caps and the small caps will hold better in this rotational correction coming up. Basil Chapman, Tiger Definitions Hour. We'll be right back. Basil.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. Let me just mention again my Friday all-day webinar. I've started sending out the CDs for people who are going to be coming to the webinar, but the techniques that we're going to discuss, trend lines. Look how easy it is. You can just set up a trend. Let me just choose whatever it is. We're looking at IWC, which is the iShares Microcap ETF. So what would I do? I'd immediately, since I'm taking the weekly chart, I immediately would say, oh, look at that. I've got myself a beautiful trend line right there. Then I do a parallel line. And a parallel line obviously is going to miss. My ISIS is going to miss by quite a bit if I go to the top there. But that's not the issue. The issue is I want the parallel line. And look how many times this level was hit. So that's my level. And I'll show you how to do that, to use trend lines. These are both trend lines, and now they become channel lines. This becomes red right here. This becomes green. And this green says anytime you get into that area, that should be support. And anytime you get into this area right here, that should be resistance, because that's what's happened. This is the pattern that's been formed. And I'll show you exactly where you can draw the trend lines. So that says the IWC weekly chart, iShares Microcap ETF, is getting into an area of resistance. But wait a minute, the waveform says there's the lowest trough. This looks like it could be an A. I've got it as a G/A because we didn't know whether this was going to break down. So far it's held, and that's really a positive. So it tells you that if the IWC trading at 96.32, up 30 cents right now, over the next week and a half is able to climb above 96.77, the high of the 13th of October, the week of the 13th, I have to consider that's a B. And that says all the way into December, the microcaps should hold very well. Okay? That's the way I'll show you how to use these channel lines, the Chapman Wave inside track propellant zones. And we're looking at the MACD. Good, not great, but good. And the stochastic's running to 80%. That's good. On balance, volume's lagging. So yes, you could double top right here, but at this point you've gone to 97.25 and 96.77. So this is in fact a new leg up. I'm going to call this B. I don't see how I can call it anything else right now. It'll be unusual to go to an all-time high and in a weekly chart fail at a peak B. And the way I'm looking at it, I don't see any other way I can count it. So that's what I'm going to be teaching you. Then I teach you how to use money management. Look, the daily chart has gone to an A and a B. Horrible action on Friday. Boom, good action, but lousy follow through today. It went to a new high to C, pulling back. It says, yeah, you might just scrape to a D, and then maybe you have to go sideways to build strength. So what do? I teach you about the wick, this particular wick, how you can use it. So it's an ongoing lesson. And then when you get my newsletter, you'll be able to follow it live. That's really nice. And I'll be showing you short-term charts. For instance, we've got the 10-minute right here. Look at that, the rectangle formation. Remember what I say about a rectangle? A rectangle can last a lot longer than your patience, but eventually it tries to pop up. If it doesn't, it'll come right back to the support level. Boom, and that's what it's done, and now it's making an arch formation. So this is a 10-minute E-mini chart. Same patterns repeat, doesn't matter what time frame. Next question I had was gold. Yeah, so the gold right now is down 5. So this is very interesting. You have the arch formation, made a peak F in the Chapman wave, a D in the weekly chart, pulls back. It's really struggling, but it's not breaking down. My suspicion is that gold is starting to build some kind of support that later on is going to turn into something a lot more positive, but it's still building that support. And the dollar should be pushing much higher to the upside. Big deal. It's up 34 cents. We are still long the dollar, but believe me, it's been a tough road to hoe. It's not showing the kind of strength that it should be showing, but it's not breaking down either. So, and then TLT, TLT is down 33 cents. This is holding pretty well. And my contention has been that when the market really starts to pull back, when the Dow starts to see about a 400-500 pullback instead of a rally, you will see money flow into the TLT, and then you'll start to see a move to the upside. However, there is a pattern that I discussed in great detail over the weekend, and it's an ongoing study. It's not like I really came to a conclusion. I'm getting to a conclusion. And what I did say is that the chart of the 5-year is going to be a big clue. And why is it going to be a big clue? Because look how it's gone to a leg C, yet the 10-year is still stuck in an upper range but hasn't broken out. And the 30-year is even worse. It's pulled back, made an arch formation. And this kind of divergence we last saw at the end of December of 2015, the beginning of January of 2016, and that's when the market really took a hit. But it had already been going down. The difference is that we're making new highs as the 5-year is making a new high, recovery high, and that didn't happen before. The market was already in a pullback. Other thing is that wood, the iShares Timber and Forestry ETF, made a peak F in the weekly. It didn't participate last week, and it's not participating today. It's down 27 cents. But the HGX, is making a new high, and that's the Philadelphia Housing Sector Index. And if you look at Home Depot, HD, good action. Look at that. Leg C, leg, let me just double check here. So, no, that's still the C, 73. Yep, this is C, and this is D, leg D. Leg D in the daily, leg E in the weekly. So I had a question. If you've got all these Ds and Es in daily, weekly, and monthlies, surely you'd be wanting to short. The answer is simple. As long as there's a rotation into the different sectors, you can have a high-level consolidation. Specific sectors could have a pullback. To get a unified, a unison pullback, you want all the sectors. You want what I call a Granville sell signal, where 95%, 96% of stocks go down. Yeah, just about everything goes down. So what I'm looking at here is there is going to be a timing aspect involved here to go short. On a short-term basis, daily basis, we might be very close. But if you're looking at the weekly charts, you've got to see some impact in the technicals. And we'll only know that in the next 2 days, depending on how the daily charts act. But yeah, on a short-term basis, I'm real close to wanting to put some shorts on, but I haven't done it because I just see rotating strength. So that was that question there. And, another question came in. Yeah, so what sectors are you looking at that might show strength? This is the week that you tell. Last week I saw the signs. This week I have to see the follow through. One of the signs was that maybe this time you do see some stronger move to the upside in the IBB. Well, that's possible. I don't like the candle today. I do like that it went to a leg C. I do like that the MACD's improved, the stochastics improved, but that weekly chart needs so much work that until the IBB goes into the 108.50s, and it's a 105.44, made a high today of 107 something, 107 round number high. So I want to see it trading in the 108. Then I think that weekly chart will improve. So I'll be back. Basil Chapman, Tiger Technicians Hour. That was up 190.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Folks, don't forget, Steve Rhodes comes up, a great analyst. Listen to him. It's really a treat. And, of course, you've got Dave White, another great guest. And, of course, the one and only Tom O'Brien right there wraps it up, 3 o'clock to 5 today. You've got technical analysis all day. So we're looking at the IBB, spoke about that, and the rotation. So, and the SLX is holding quite nicely here. It's up. Leg B, that is the Vector Steel ETF. One of the reasons why we are, in my opening call, we are long AKS, AK Steel. It's actually percentage-wise, it's doing very nicely in just a week and a half. What is it? Since the 27th of November, it's done about 11% gain. But it's in leg C, made a new high today, and it's in a very narrow up channel, nice technicals. Price movement's good, but until it breaks the gap of 546 to 585, it's just a bounce, and that's going to be tough to do. So that's different. Look at X, and also a sharp pullback a couple of sharp pullbacks, but now it's in leg C to the upside. US still. So yeah, I do see that there are some areas that you can look at. We are still long General Motors, and General Motors is acting quite nicely here. But we're along from the 34s, and right now it's at the 43s. It had hit 46s. So, yeah, some things are working, and I don't see, I'm not looking at overbought situations in all the areas. There are some areas, I mean, if you go to LRCX, which is Lamb Research, look at this, makes a peak D again, right there. On the 21st at 219, it's trading now at 100, hit 180 this morning. That's one of the biggest moves down that it's had in ages, the biggest percentage move, yeah, but it's the biggest point move it's ever had to the downside. But so far, maybe I'm wrong. I am calling it, I can call it a G/C. I'm not sure. I don't have to call it anything because we don't have it. I'm just looking at it as part of the corrective process. I think that the semis are done for now. They're going to have to take time to heal and repair. So don't forget, go to the front page of TFNN, check out my all-day webinar coming up on Friday. What you want to know is what I want to teach you. What you don't know about the Chapman Wave methodology, you'll pick up very quickly. These are pretty simple explanations. It's how do you work it, how do you trade it, and what do you do? And that's what I'll be discussing in great detail. Check it out. I think it's going to be a great learning experience. I love doing it. Stay tuned for...
It's that time of year again. The TFNN Salvation Army Tiger Dollar Holiday Sale is back. Through this Sunday only, you can get a 25% bonus on any Tiger Dollar purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. This sale only comes around once a year and is one of the most rewarding promotions we have. Tiger Dollars are a great way to add extra savings to any TFNN product or service. Whether you're considering signing up for any newsletter or workshop in the future, or you're already a subscriber, Tiger Dollars offer an immediate savings on any TFNN newsletter, webinar, workshop, or Master Trader series. And they never expire and are fully transferable to friends and family. For all the details and to take part in this special promotion, visit the front page of TFNN.com before this sale ends Sunday, December 3rd. And happy holidays from TFNN.